I see some people pulled up. Good morning, y'all. What's going on? Let me see who pulled up. Let me see who pulled up. I got the chat head, so I won't be distracted. What's up, Garrett? What's going on, Kyle? Good morning. Good morning, Brittany. Hello, Brittany. How have you been? I'm just I usually sit down on Saturdays and go through the what's name, go through the charts. I was trying to get my outside ambience going on. Trying to get my outside ambience going on. Let me see if my outside ambience working. Oh yeah, I can hear it. Yeah, it's working. My outside ambience working. My outside ambience working. Hola, hola Valdez. Can y'all hear my outside ambience? Idris. How you related to Idris? You still ain't let me know if you related to Luke. Hey, so basically, what I do on Saturday, right? For those that don't know, birds chirping. Yeah, I got my outside ambience. Hopefully, my birds ain't too loud, is it? My birds ain't too loud, is it? I'm set. That's an actual picture of my backyard. That's my pack. Them two of my chairs that's on the patio. I keep them covered up, but I was taking a picture of the backyard so I could put up there, and so that's my deck that I built. Me and the boys built for Calandra. All of us worked on it, but I did most of the work. Built for Mother's Day a couple years ago, and then that's actually in my backyard. So I took a picture of the backyard, and then I got the ambient sound playing. I did brother that's a couple times. Oh, you did? Oh my bad. I'll be missing stuff in the chat. But yeah, so basically what I be doing on Saturdays, I just sit down Saturday morning, usually Saturday morning after I eat breakfast, I come back here and sit down, you know what I'm saying, for a little while and just and just like go through the price action from the week and look at things that relook at things that I thought I saw, try to find anything that I missed and just, break down and just look at what the price action did. There's always a story to be told with price action. You know what I'm saying? No matter if it's a trending market, a consolidating market, there's always a story to be told with price action. So I just like to go back through the price action for the week and look at the story that was told. And what I'll do, I just start. What I do, I start from Monday and then go through. So the fifth through the ninth. So I start with Monday and I go through and I look at my divergence to see if the divergence could have pointed something out to me or something that I missed. And I look at the daily time frame in the 4 hour time frame to see if it's like supporting stuff or resisting stuff on the lower time frames. I just walk through the price action and see what's going on, you know. And I had put something in Discord to see if anybody wanted to pop on earlier. I don't think anybody replied. And then I was back here getting ready to get on. And I was like, hey man, let me go ahead and drop a video in case anybody want to pull up. So that's what it is. Again, I got the chat here so I won't get um distracted by the chat. And just y'all just hang out if you know what I'm saying. If you got a question or if you want to say anything, just hit the link. Just hit the link and then if it pop up over there, it should catch my attention if the then if it like change or make a move or something, it'll catch my attention, and then you know what I'm saying, I'll just pull you up and you can ask a question, or you know what I'm saying, just direct me to your question in the chat. So basically what I do, I like to go to the first day of the week, Monday, the 5th. Monday, Tuesday, Wednesday, Thursday, Friday. Okay, so Monday, the big drop day. All right. And since I got all that stuff on there, I'm gonna go over here to the ES. Since I got all that stuff on the other chart. So the first thing I'm gonna do, give me some vertical lines, mark out the time frame that I want to look at. Start out with Monday, London. So let's go to, we'll go to 2 a.m. Apply. I'm gonna start out by looking at the London. Put this one there. Did I not copy that? This one at 5. All right, so before I do that, let's look at it. So this is Monday. So before I do that, I'll leave those there. Let's mark out the daily levels that we're watching here. So this is a see, like this here, how I always be talking about when you got a smaller, you got consecutive candles, which is the order block. Then you got a small one at the bottom, and then these other two, I always be talking about how you got to bear in mind the entire order block, right? And since this is such a beefy candle, right, these would be the main two I would be watching, because it's such a big space in between these two. That's a huge gap down. So it's such a big space in between these two. So I would be, and then the price came down and took care of this gap down on Friday, right? So it came down and took care of that gap down on Friday. And then so this is the portion of the order block that I would still be keeping in mind, right? I would mark this out as the order block, right? I will mark that out as the order block, and just like I normally would, right? Daily order block, right? I'll mark it out as the order block just as I normally would, and then I would keep in mind that the mean threshold of the entire order block that I'm still watching is at 39.91.25, right? So that's the mean threshold of the portion of the order block that still hasn't been like attacked, right? Because we came down, filled in this full gap and this volume imbalance on that Friday. So, and then as we can see with hindsight, you know what I'm saying, we just, as ICT like to say, we just pretending like, you know what I'm saying, this is what we already pointed out when we couldn't see these candles, right? But this is what I always preach all the time. Like, I mark the lowest one, but since that's such a tiny candle, I still keep in mind both of these right here, and the mean threshold of that right there is 39.91.13. So I'm just gonna put a line there, and I'll put a horizontal line there, and I probably should be doing this in what's the name, so I can put I can chart it a little bit better. But I need to be able to see my divergence over here. I like charting in Trading View better than NinjaTrader. I ain't gonna hold you. So what I'm gonna do, I think I'm gonna chart it in Trading View but I'm just gonna look at my divergence in NinjaTrader. Yeah, I think that's what I'm gonna do. All right, let's move over to. But NinjaTrader let me mark out like sections of time easier with my lines too. It lets me like highlight sections of time easier. Let's see. If NinjaTrader, if TradingView get on my nerve, then I'm just gonna come back to NinjaTrader. But see, it's things I like about TradingView and it's things I like about NinjaTrader. TradingView, I like how I can chart it like super duper easy. And then NinjaTrader, hey, why that look like that? Oh, I got to go into charts first. You can see how I was talking about how the candle look different. How the candles look different on the new contract and the continuous contract. Friday look totally different. That's a total different story on those two different things. Those two totally different stories. All right. So we're just gonna use this one here so that the candles line up together. All right. Close out. Okay, so again, mark out. Order block. Bullish order block. Daily bullish order block. And keep in mind this entire order block right there. All right, you're keeping that in mind right there. And then mark out a mean threshold of that order block. Okay. 40, 28, 25. See how the numbers are different because it's showing this is the new contract, so the numbers are different. 40, 28, 25. You know, it's that like 30-point difference. I was close when I clicked that. I put it on 50. All right. Daily. All right. So order block, mean of the order block. We already came down, took care of that volume imbalance right there. So that's it, because this is Monday. That's Monday. So we got the order block. All right. So let's go to 4 hours. So to the 4 hour, you got a fair value gap. 4 hour fair value gap. Just marking out the stuff from 4-hour bullish fair value gap. All right, so I got the bullish fair value gap, 4-hour. Order block there. Came down here to this breaker, bounced off that. We heard it where it came to the breaker and bounced off. I'm not gonna mark that. We got another breaker down here on the 4-hour that I could mark off. Four-hour breaker there. I don't have a 4-hour break. Yes, I do. Breaker. 4-hour. What's that 4-hour? Yes, 4-hour breaker. Yeah. That's it for the 4-hour. Okay. Drop down to the hourly and look at the London for Monday. Spam risk, get out of here. You interrupting my nature, spam risk. What was Monday? The 5th. Okay. So Monday the 5th. Let's block out 04. Okay. So looking at Monday the 5th. So let's go from midnight, going from midnight over to, let's go from midnight to 8. Let's go from midnight to 9. So from midnight to 9 on Monday. Okay, so from Monday from midnight to 9. Midnight to 9, just before the New York. All right, so in the hourly, not much going on Monday. So Friday we came down, 8 in the morning, pushed up, came right up here to relative equal highs on Friday. Looking at the divergence. So we're going to what was Friday. Friday was the 2nd. Is it matches? This it ain't nothing sexy about reading the charts. I see some comments popped in there. A bird sanctuary. Yes, I'm in a bird sanctuary. I'm in my backyard. That's actually my backyard. That's actually my backyard. I'm in my backyard. Okay. All right. So on the second. Okay. So on the second we came down. See how we pushed up right there. Pushed up. Boom, boom, boom. Hit that. That's when we had that divergence. We pointed that out on Friday. We had that divergence on Friday where the we pointed that out on Friday where the Dow and the ES had tapped the highs, but the AQ didn't during the I can't see my I can't see my bottom. I couldn't see the bottom with the dates. So from 8 into 2. So pretty much during the New York session, we came up and we had S&T divergence where one of the indices was failing to make higher highs, and the other ones had ran buy side liquidity. And with ICT strategies, during certain times when one of the indices failed to follow suit, a lot of times that be symboling a reversal, right? If you of that mindset already. And let me add on to that, right? We were in an extreme premium. I was expecting it to sell because we was in extreme premium, right? We had came up so far, we was in extreme premium, and I was expecting to sell, meaning I was bearish. So once we got up into the premium, the algos, the three indices showed S&T divergence on Friday, right? And that's why I put in the Discord and I was like, hey, this usually is the precursor to selling because we was in the extreme premium and I was looking for a reason to sell. And this right here gave me my reason to sell. And this is when I bought those puts on Friday afternoon. And then as we see on Monday, it played out for me. So it, it worked the SMT divergence tip along with the fact that we was in extreme premium. That worked out to the good for me, right? It played out as it played out in the most probable way, right? So after that, so Monday morning, on the hourly charts, we came down, and right before New York opened, we came all the way back down to the bottom of this humongous down close candle right here. All right. So over Sunday night, we just consolidated. And then at midnight, we started selling down, selling down, selling down. So on the hourly, it's just a straight sell down. We had some consolidation right here from 3 until 7 on the hourly. We had some consolidation from 3 until 7 on the hourly. And then after 7, started selling down again. Let me go back and see if there's like what news it was throughout the week. I can't remember. We had ISM on Monday. We had unemployment on Thursday and PPI on Friday. Okay. And then, so nothing exciting there. We dropped down to 15 minutes during that time, see if anything's popping. All right, so on the 15-minute, nothing too terribly exciting happening during the London on the 15-minute. We consolidated Sunday night after midnight. Kept the consolidation up. On the 2 o'clock calendar, we started to push down. Had a break in market structure. Kissed the fair value gap right there. Kissed the fair value gap right there. I don't take fair value gap trades off of touching the gap, so that wouldn't have picked me up. But we did kiss the fair value gap at 2:30, just before the London Open. At the London Open at 3 o'clock, we ran. We had another break in market structure again. Got down to, so on that first breakdown, we got deeper into this fair value gap right here. Didn't completely fill it. So we got down into 15-minute order block. Had a reaction off of that. Still kind of consolidating though. Another breaking market structure to the downside. Didn't close below it though. Still consolidating. Pushed back up above this area of consolidation, but didn't break the main area of consolidation. Breaking market structure again. Right, breaking market structure again, did not get below this sell side right here. Over there at this 1 o'clock candle from Friday. This would be the 12 o'clock candle if it posts like at the end of the price name. This 1 o'clock candle on Friday. Didn't get below that. Then at 8:45, we had another breaking market structure to the downside, getting below that sell side. So we took out that sell side and filled in this 15-minute fair value gap and got down into this order block over here after this consolidation right there. That's the beefiest candle of that area. So then after this breaking market structure on the 9:30 candle at the market open, we traded back up, filled in this fair value gap, and got into this order block and then sold off. So Monday morning, let's move over here. We're gonna come over here to the 9:30 candle. I'll put it at 9:15. That's good. 9:15. We'll push up. We'll just push up for the rest of the day. One candle over. Give them the room to see. All right. So at the 9:30 candle at the New York Open, we had a breaking market structure on the 8:45 candle with a nice closure below. Keeping in mind what's going on to the left. We got a small 15-minute fair value gap over here. Oh, yeah, excuse me. I don't have anything for 15 minutes. Got a 15-minute order block right here. All right, 15-minute order block. Okay, so we pushed up into this order block right here and this fair value gap. So we had an order block and a fair value gap on the 15-minute, pushed up into, that was a good short right there. All right, took it down. We were in the, based off of that range from that day, equilibrium from that day. From Friday, equilibrium from Friday. Okay, so now, so we pretty much talked about that. We came down, consolidated right at equilibrium, right? I remember before when I was like, we consolidated a little bit, then we pushed up to that. So we was at equilibrium. Now that I got everything marked on the chart that's supposed to be there, it's starting to make a little bit more sense to me now. So overnight we sold down, pretty much sold down all the way to equilibrium from Sunday night, and then to Monday morning we sold down to equilibrium. We got to equilibrium at the 8:45 candle after making a break in market structure. Heavy distribution down, break the market structure, come to equilibrium, right? Consolidated for about 30 minutes or so. When the market opened up, boom, blast off came up, filled in this fair value gap, and hit that 15-minute order block. Heavy reaction off of it. Heavy distribution to the downside, came all the way down to this fair value gap in the discount. Right there. Let's go up an hour on the hourly. Let's see where if it did and had any reaction. Like that. So going up to the hourly. Okay, so on the hourly time frame, pushed up, it came down, it came back to the breaking market structure on the hourly time frame. Yes, just on the hourly, just came back to a breaking market structure. That's pretty much it. Yeah, that's it. Came back to the breaking market structure. Just pushed back up into a premium. Oh, excuse me. Man. Your boy is tired. I was up so late looking at TV last night. Then we had a 9:45, 10 o'clock candle. We came down to that other 15-minute fair value gap. Nice heavy reaction off of that. Right, heavy reaction off the 15 minutes. I mean, I said, yeah, fair value. No, I got fair value gap. That's an order block. Why do I have that marked as a fair value gap? That's an order block. That's why I said fair value gap, because I got it marked wrong. So came back up, stopped at the fair value gap, bounced off the order block, stopped at the fair value gap, pushed back up to this 15-minute fair value gap that was made on the heavy distribution to the downside. And then sold off nicely going into lunchtime and cut through the fair value gap and order block like butter. We had come down and service that fair value gap, reacted off of that order block. That's the reference point. Bounce back up. Nice reaction off of it. Come back to the breaking market structure and the fair value gap 15-minute on the upside. Then cut through those PD arrays like butter because we already serviced them. Nice, clean price action. Set another fair value gap. At lunchtime, we came back up into that fair value gap, overshot it a little bit, then melted down some more. Consolidated for a second. Heavy distribution down to the mean threshold of the day from what mean that's the mean threshold for the order block. Okay, so we came down to the mean threshold of the daily order block right there. All right, so that's the mean threshold of the daily order block that we marked out, which this order block right here is the final piece of that order block. This is the mean threshold of this entire order. This is the bottom piece of the order block that contains this mean threshold right there. So we hit that on Monday at what time did we hit that? We hit that on Monday at 1400 candle, 1400 candle. That'll be the 1500 candle for anybody that's on Ninja Trader or anywhere that name the candles with the closing date. Closing time, should I say closing date. Then we dropped just below the mean threshold of that order block and then bounced off of it. Rest of the day we skirted above, flirted around at the top of it in the mean threshold, and then now we're moving into Tuesday. So Monday was pretty clean price action. Monday we Sunday night we consolidated. Just for note taking purposes. Sunday night we consolidated, came back down to the mean threshold of the daily range from Friday, right? At the New York Open, we closed the fair value gap. We be waiting on some bond. I'm still waiting. Oh, hold on, my little brother texted me about something that he's trying to do for my mama. Hey, y'all, I'm trying to. I appreciate if you could share. Man, I'm not. Man, I thought that was my brother. I thought that was my brother, my auntie. Talk about ending on top of the leaderboard. I'm not. I do not do them fundraisers. I keep trying to tell her, auntie, I don't support fundraisers. I don't even support my own kids and they fundraisers. When they be sending a mess home, I just write a check. I ain't got time to be going out harassing people about no fundraisers. So like I was saying, on Monday, clean price action. We came back down to equilibrium on Friday's range. At the 9 o'clock open candle, we pushed up and closed in the fair value gap and hit the order block that we had created between 8:30 and 8:45. Right, we created an order block. The order block was the 8:15 candle. The fair value gap was in between the 8:30 and the 9 o'clock candle. At the 9:30 open, we pushed up into that order block and that fair value gap. If you would have taken that on either one of them, your stop loss would have been there and safe. Above, it would have been above the 8:30 candle and safe. Heavy distribution to the downside, came into a deep discount of the range. Hit the 15-minute order block, bounced back up into the order block that was made on the initial distribution down. Very, very close to equilibrium. Came into the order, the fair value gap, filled it in nicely. Heavy distribution to the downside, melted through the order block in the fair value gap like butter because we had already serviced it. Had one more retracement right at right around lunchtime between 12 and 12:15, filled in that fair value gap, then melted off again toward the end of lunch. Then at 1:30, like around 1:30, we took out um, the lunchtime low at on the 115 calendar, took out the lunchtime low and continued down. So we didn't get um, a retracement back. Let's look at the 1 hour calendar, see if we got any. I forgot to check that. See if we got any kind of lunchtime retracement. No, we didn't really get no lunchtime retracement to go back and attack anything. So right at the end of lunch, we just melted all the way down. And then the rest of the day we moved off. Let's go over to the next day. Real clean price action on Monday. Can't be mad at it. Can't be mad at it. That's the day that I got out of my puts. Uh, I think I'm just gonna highlight the New York session. I think I'm just gonna highlight the New York session and focus on that. I put it around and just focus on that. So yeah, Tuesday again. Tuesday we just kind of consolidated throughout London. After the Monday close, we rallied up, continued to rally up until 9 o'clock, then start to sell down a little, and then right around the mean threshold of that order block, that daily order block that we had marked out on Tuesday, we skated across the top of that daily order block at the top of that 4 hour fair value gap, skated around there, um, bouncing on this outlet order block too. So you got an outlet order block sitting at the mean threshold of the daily order block. So that's supporting price very well because it's a multi-level order block. The confluence. Sometimes you might hear ICT call this a nested PD array, nested PD arrays, because you got a daily order block and it's an hourly order block inside it. And this hourly order block happens to be sitting right at the mean threshold of this daily order block. Sometimes you hear him call that a nested PD array. So we got a nested order block right here at the mean threshold of the daily order block, and it's at the mean threshold of this 4 hour fair value gap. So you got all kind of confluence right there in that area, and prices like totally respecting it throughout the night. We came up and just bounced across the top of it, and then at the London had heavy push up without taking out highs. So let's check this area right here for any kind of divergence. So Tuesday morning between uh, between 2 and 6. So Tuesday morning between 2 and 6, which would have been December the 6th. All right, so looking here, we got 1, 2. Okay, so 2 o'clock. So it's gonna be 3 and 7 for me. It was 2 and 6, so that's the 2 o'clock candle. That's 6 o'clock candle. So between 3 and 7. So this is the 3 o'clock candle. All right, right here. Let's see if you can see this one. It's just actually see kind of a little bit better. Oh, all of them moving at the same time. All I move up and down at the same time. So so down, down, and that one went even Steven. So um, so all of them failing to make higher highs. These just a little bit stronger. So there's no kind of divergence on that candle. But here at the 8 o'clock candle, the NQ went higher, and then these two went lower. So no clear divergence before the fall. So can't call that no clear divergence before the fall, but because it's now if you look at the bodies, but I feel like I'm fortunate, so I'm gonna leave that long. No clear divergence before the fall. I feel like I'm fortunate, so I'm gonna leave that alone. Now, um, we skated across here. Then at 9 o'clock, we just melted off for the rest of the day. Now let's go down to the 15 minute and see if before I drop down to the 15 minute. So it's the high. So you guys the low for the equilibrium for that day will be there. Because just from here we already traded well down outside of it. Shit, get over there in case I need it. Yeah, so on this time frame here, we already traded down well below the equilibrium, and we consolidate in here. So we're gonna look at the equilibrium for this day. So after 1900, so that's the high. After 1900 to the low there, then equilibrium will be there. All right, so that's equilibrium one. Oh no, hold up. So this is Monday also, but we well below that. Okay, so equilibrium for the Tuesday price range. So that's what I was looking at. So after midnight, it's the highest high, that's the lowest low, and that'll be equilibrium right there, right at the top of that 4 hour fair value gap. Okay, get yourself together, Tim. Act like you did this before. So equilibrium, nope, it will be right there, 40.37. So that's equilibrium for the Tuesday candle price range after midnight. Yeah, I had it right the first time because that's the Tuesday. Because Tuesday start at that time. I'm gonna get this together in a minute, y'all. There you go. All right, so that's the equilibrium for that. We're skating on this hour order block, so I'm not gonna mark that. And then let's drop down to the 15 minute now. I see we working with. All right. So during the London on Tuesday, um, came up, did not take out buy side, took out sell side. Right. Took out sell side, did I take out buy side, came down, breaking market structure again without a closure below, but breaking market structure again. Um, at 515, did not get back into that fair value gap at equilibrium, came to equilibrium, pushed back down a little bit, took off, came up, breaking market structure to the upside on 15-minute, traded up here into bearish order block, hit the bearish order block, came down back to the B threshold of that daily order block into a discount of the Tuesday's daily dealing range, taking out the new overnight low, making a new overnight low right at the equal mean threshold of that order block again. 815 pushed up, filled in this fair value, get this 15-minute fair value gap at equilibrium for Tuesday. Then consolidated slightly after touching equilibrium once, twice, sold off heavy distribution, never looked back. Never looked back. On Tuesday, trade balance, nothing, no big news, but heavy distribution on Tuesday um, after hitting that 15-minute fair value gap and getting back to his bearish order block. 12 o'clock, I hit a horn blowing after the heavy distribution to one side, got a nice sell side imbalance. Never tried to revisit it above the 15-minute time frame. Continued to melt off after 12. Continued to melt off after 12. Yeah, 2 o'clock. Excuse me. 2 o'clock. Broke to a new low at 2:30 inside this consolidation at the bottom of the dealing range. Pushed back up at a breaking market structure to the upside, going into the 4 o'clock close on Tuesday. So on the 15-minute, Tuesday price action was pretty clean for futures. For as far as a short entry, when it came to options, it really didn't give any opportunity that I would look for, because on the 930 candle, right here 930, all it did was sell off continuously all the way up until 11 o'clock where it consolidated. And then when it took off again, there's one retrace the fair value gap at 1345, and then a small sell-off after that. But prior to that, everything is just heavy distribution to the downside, consolidation, heavy distribution, consolidation, one retrace, heavy distribution. So as far as futures, gave a nice fair value gap / order block entry at the Tuesday's mean threshold up until that time. When it comes to options, it may have been some lower time frame scalps that were possible, but I ain't diving that deep into it. Let me get a sip of water. I see some bubbles over here. Let me sip some water while I look at these bubbles. Tim need a nap. Little Timmy in the jungle. Yeah, I'm in the jungle. I just had an aha moment. What was your aha moment, Valdez? Share your aha moment with me. You're welcome. I need a nap. I was up late, Phoenicia. I was up late watching a show called Travelers. I'm binge watching it. I was waiting on that lunchtime retracement and it never came. What was that on Tuesday? What was that Tuesday you was talking about waiting on a retracement when it just died off? Or was it Monday? Is the nested PD array the same? Yes, it's the same as Confluence. Yes. I call it Confluence. Sometimes you might hear ICT say a nested PD array. Is Tim really outside? Sound like he in the Amazon. Nah, I ain't. That's actually my backyard. I took a picture of my backyard, but I got my phone right here playing some outside sounds, setting the ambience. Setting the ambience. Um, all right. Sip on my water real quick. Then we're gonna move on to Wednesday. We're gonna move on to Wednesday. Again, Tuesday was pretty clean. They had a pretty clean futures trade um, on this fair value gap retracement on the 830 candle. Um, wait a minute. This 830 count, yeah, these 15-minute candles. Yeah, so it's before the market open. It's before the market open. Yeah, so it had a pretty clean futures trade on this fair value gap retracement back to the equilibrium of the Tuesday's candle up until that time. Did you already look at the monster 4 on ones? That monster 6 on the 1 second chart? The 1 second chart? What is a monster 6? Oh, volume imbalance. Oh, volume imbalance. Oh, no. I'm like monster 6 on the 1 second chart? I ain't never looked at a 1 second chart. I ain't. Thank you, Cool It. Thank you. I've never looked at a 1 second chart. Or are you talking about Skinny Mini with the 1 minute chart? Oh, referring to Friday. Oh, okay. All right. I'm gonna hide the chat again. I'm getting distracted. All right. So yeah, again, Tuesday had a nice futures short. And then but when it came into the market at 9:30, it was just melting. So I'm not seeing anything that I would have been interested in trying to jump in. We did get into a little consolidation, around 11 o'clock or so. Got into a consolidation around 11 o'clock or so. Then during lunch, it just continued to sell down. So then after lunch, we got into a little consolidation after lunch. Had a breaking market structure to the downside, but then it started to reverse after that. So this was really long in the tooth, and this breaking market structure to the downside right here wouldn't have interested me of trying to continue to short anything that we have been running all day long on this right here. And yeah, this would have been a fool's trade. And as you saw, it would have been a nice scalp for some people, but yeah, that would have been a fool's trade right there. Moving on to Wednesday, la la la. Wednesday, la la la. Oh, we put this on hourly candles real quick. Moving on to Wednesday, la la la. To Wednesday, la la la. Where's my stuff at? Oh, my man. I haven't got lost for a second. So Tuesday. All right, so Tuesday's mean threshold. So Tuesday's mean threshold or Tuesday equilibrium, should I say. All right. Here we go. And we're going to move this over to Wednesday. It's Thursday. All right. So, all right. So that's Tuesday's mean threshold. I mean, that's Tuesday's equilibrium. Then coming from Tuesday. Okay, Tuesday's close right here. So we push up a little bit, getting back up, taking care of this fair value gap. Consolidate during the Asian. Then at midnight, just after midnight, little consolidation continues. We have a breakdown, go down to hit this order block, bounce slightly, coming to this fair value gap at a breaking market structure right here. Left a fair value gap, pushed up into that fair value gap on the 6 o'clock candle. Then melted off and took out sell side liquidity below Tuesday. All right, so took out sell side liquidity below Tuesday's low. All right. So once we took out Tuesday's low, right, we immediately reversed and took out Wednesday's high. So we immediately took out Wednesday's, I said buy side or sell side. We took out Tuesday's sell side liquidity. And then we reversed and immediately took out Wednesday's buy side. And then so with a lovely experience of hindsight, we see that we never got to Tuesday's equilibrium. So we're gonna go ahead and mark out Wednesday's equilibrium. So we got Wednesday's equilibrium now. All right, so we got Wednesday's equilibrium. Wednesday's high. Let me go up real quick and see if there's any other higher time frame things that I want to mark out. It's Monday, Tuesday, Wednesday. So we're here. So there's nothing that I want to change on the daily. I can get rid of this. I'll bring these back if I need them. I get rid of that. I can get rid of. I'll leave that there. I can get rid of this breaker on the 4 hour. I'm gonna leave it there. I'm gonna leave it there for a second. I see in hindsight it came back to it. I want to drop down lower and see what's going on with that. So I'm gonna leave it there. All right, let's go down. The time frame with that break on. I didn't mark the time frame when I break it. Was that a 4 hour breaker? All right, let's go down to 4 hours and see something. Okay, so on Tuesday we got this 4 hour fair value gap. We're gonna move this forward. A 4 hour fair value gap from Tuesday. That 4 hour fair value gap on Tuesday. I'm gonna get this daily order block out the way since we already used that. And then I'm gonna take this breaker out the way too. because this was the breaker. We already sold down through that. So I'm going to move that breaker out the way. And then we got another fall silver we got here. All right. So those are the higher time frames. We're going to look at, because that's from the Tuesday 4-hour time frames. Nothing from the Tuesday daily. We got a break in market structure here. We got a break in market structure there from get out of here, spammers. You interrupting my birds. All right, so now let's go back down to the 15-minute because we had looked. I think we looked at the hourly. Did we look at the hourly already for Wednesday? Let's look at it anyway. Yeah, we did. We looked at the hourly already on Wednesday. Let's go to the 15-minute. All right. Through the value of hindsight, we're just gonna zoom in here because we know that that was the low. That was Tuesday's low. That was Wednesday's high. And this was Wednesday low right here. So now that we took out the Tuesday sell side, we're just gonna mark that for Wednesday's low. So that's Wednesday's low and Wednesday's high. That's Wednesday's equilibrium. Okay, so we came down, consolidated at what turned out to be Wednesday's low. Again, that's the when I was like, hey, I just got onto something. When we was consolidating that, we came down to be what was we stretched it out. That turned out to be like Wednesday's low. If I would have been stretching this out, if I would have been testing that theory on there, I would have came and put the 50% right there at the pretty much the break even, pretty much the middle of the consolidation. And as you see, it would have went a little bit below it, but close enough for government work as far as like the projection. That when I was like, hey, I just found something, but that projection thing there, it's been working out pretty good. I ain't gonna hold you. I took a 10-point MES trade on it overnight the other night. It worked out fine too. I think I might have took like one or 1.5 points of heat on the trade, and I was giving it 8 points of risk. It's been working out pretty good. So we came down to what was eventually Wednesday's equilibrium. Took out sell side liquidity on the 7:15 candle Wednesday morning. Do we have any news Wednesday morning? Wednesday morning, we had crude oil at 8:30. Revised non-farm productivity. Revised labor costs. What is that? Analyze change in labor effective in producing goods, service, excluding farm industry. What that is? I ain't gonna hold you. Okay. Then after taking out the sell side liquidity from 7:30 up until 9:30, we came back to equilibrium. We came back to Wednesday's equilibrium from 7:30 after taking our sell side. Came back to equilibrium at 9 o'clock. Then at 9:30 at the market open, we continued up and took out buy side. Right. So on the 7:15 calendar, we took out sell side from 7:30 up until um, 8:45, 9 o'clock. Then we consolidated until the New York Open, consolidated for about 30 minutes or so, 30, 45 minutes, stayed at this range, right? Did at the New York Open, we took off, took out buy side liquidity, nice heavy reaction off of it, right? Next candle came back, we chopped back and forth, chopped suey for a while, we chopped, came down into this liquidity void right there on the 15-minute. We had a nice liquidity void on the 15-minute. We came into, pushed back up, and eventually went above the prior area where we had ran buy side liquidity. You know what I'm saying? Kind of chopped around a little bit, but we eventually made a new high, took out the buy side again, then came back down to equilibrium around 11:15, 11:30. Chilled out around equilibrium until 12:30. Pushed back up one more time. Came up into this big order block right here. We had a big bearish order block right here on the 15-minute that we came up into, roughly at the mean threshold of this big bearish order block. Sold back off again, back down, hung around equilibrium. Still not taking out any in any of the morning New York morning lows, leaving the morning lows alone, leaving the highs alone also. And then that's it for the rest of the day. Just hung out around equilibrium. So Wednesday was a little bit more tight range. We had a nice sale during the London. London had a nice fair value gap sale. Um, don't look like it got quite equilibrium on that. I'm not up trading this time of morning anyway, but if I was, yeah, didn't go equilibrium on the fair value gap or the volume imbalance right here. I mean the liquidity void, or yes, a volume imbalance right there too. Didn't get into any of that too deep, but it was a nice sell off for anybody who take their fair value gap trades right off of the touch of the fair value gap. That was a nice sell off. After on the 7 o'clock candle, we had a nice break in market structure, fair value gap retracement there. That was a nice one, and it was right around equilibrium, so that was a nice sell-off. So two good futures trades, one in London and one on the 7 o'clock candle if you're up to trade that time. After that, we had a heavy distribution to the upside, stopped at equilibrium. Had a little pullback, didn't quite get down to this fair value gap. It was sloppy. We got back down to this fair value gap on the next candle, but all of this was like sloppy, chop, slop. Took out the buy side, heavy distribution down. When it came back to the fair value gap, kept pushing up. That sloppy price action to me got back up into this order block and sold back down again. So Wednesday wasn't too appetizing to me as far as trying to find any day trades outside of London. London had a couple nice shorts. Okay, so that's weird. Wednesday's equilibrium. Let's move over to Thursday. I'll move over to Thursday, then I'm gonna sip some water and see if y'all put anything in the chat. Big birds came out just then. Had some big birds come out just then. Big bird, big bird. Okay, so Wednesday's high. All right, so Wednesday's high right there. Tuesday. I mean Thursday. Wednesday's low. Man, I just went to sleep. I ain't gonna hold y'all. I just fell asleep. That's how I be. I be back here just dozing off. I be back here dozing off. Okay, so got Wednesdays marked out. Let's pop up. See if we want to change anything on the daily. I'm gonna get some. I'm gonna sip some water and see if y'all put anything in the chat. I ain't gonna hold y'all. I just fell asleep. This is Thursday. All right, so 4 hour, 4 hour. Um, this was the Monday, Tuesday, Wednesday. All right, so again on the daily, I'm starting to push up into this daily fair value gap right here. It's Thursday we're gonna be looking at. So we got a daily fair value gap right here. Fair value gap daily. There. Right. So Wednesday we did get up into the 4 hour fair value gap. Yeah, there we got right there. Okay, that's the bottom. So right there, that's when we came up here. That's when we made the bottom of the daily fair value gap on that 10 o'clock candle in the morning. 10 o'clock in the morning candle. We made the bottom of that fair value gap on Wednesday. We got a 4 hour fair value gap up there. This 4 hour fair value gap, we inside. Yeah, we got up into that. No, that's Thursday. So we still ain't get up inside of that yet on Wednesday. So 4 hours. All right. So that's everything I need to have marked out for Thursday. Now I'm gonna sip on some water and see what y'all say in the chat because your boy just went straight to sleep. Straight to sleep. Straight to sleep. Let me change the color of this right here so I know that's the daily. Make that a different color. Woo, let me sip the water. What y'all talking about over here? I appreciate y'all hanging out with me, man. Monday 3 a.m. 3:15 candle is a swing low. it gets violated on Tuesday on 10 o'clock candle. Sorry, 9 o'clock candle. That was where you talk about the aha moment. When you said it was aha moment. So Monday the 3:15 candle. 3:15. I'm on the hourly. Come on, Tim. Tighten up, man. $13.15. 15:15. So 3:15 a.m. or p.m. gets violated on Tuesday at 10. So let's go to Tuesday at 10. Tuesday at 10. Sorry, 9. Tuesday at 9. Or is it 8? Is it 9 or 8? Is it naming it on the end of the calendar or the beginning of the calendar? Let's go back. Monday 3:15 calendar. Monday 3:15 right here. Okay. All right, Monday 3:15 gets violated by right here to 9:30. Is that what you're talking about right here? That's what you're talking about, Valdez, right here. This swing low right here. Then ran through it right here at the 9:30 candle right there. Is that the area you was talking about? I don't know. Good night. If he yawn again, I'm gonna take him out too to get some rest. This how I be, man. I'll be like this. I'll be back here. I'll be back here dozing off. I'll be back here dozing off because I was up. So man, I ain't go to bed till like 2:30. Up looking at TV. That's exactly how I fell asleep at work. Fall asleep at work at least once a week. Man, when I used to be in my cubicle, I used to be sitting in front of the computer like this. I'd be like, so much productivity. Okay. Okay, let's get back to it. Thursday. We almost done. Thursday. All right, we're looking at Thursday. So we got Wednesday. All right, so here we go. 15-minute candles. Let's look at the hourly real quick before we go to the 15 minutes. I ain't even been looking at my divergence because since I'm on two different trading platforms, it's like too much work to try to line them up and figure it out. So I haven't even been watching it. I ain't been looking at any type of divergence with this because I'm on two separate things. So it's been way too much work. Okay, so on the hourly Wednesday evening, we open up Tuesday here. I mean Wednesday, we open up Thursday right here. So this is where Thursday open up. Right there around 0 UTC. We sell off. Come close to, is this? So that actually would be the low right there. That's actually the low right there, which will entail affect this, but it's not far off. It's a little bit lower. All right. So at 0 UTC right here, we sell off, almost come down and take out Wednesday's low stop. Actually got down into the sort of, you can sort of say it's a rejection block. I don't like how them candles lined up, but it's kind of like a one candle rejection block. We touched it earlier, took off, right, and then came back to it here. So it's like a one candle rejection block. Same with all them PD arrays, like you can have like the risky Roger entry where as soon as it forms, you touch it, or you can wait for it to retrace back to it. This was the touch on it. As soon as it formed, you had the rejection block, the candle poked below it, took off, right, and then it traded back down to it again and hit it and then bounced off. So that was the retrade, that was the revisit entry, and then that was the risky Roger reckless Rachel entry on that rejection block right there. All PD arrays have them two different ways you can enter. I ain't gonna say it ain't always, but you got two different ways you can enter on the first touch soon as it formed, or you can wait for it to trade away and come back to it. I like to wait for it to trade away and come back to it. That's my style. Okay, so sold down, almost took out the sell side, but did not. Heavy rejection off of it, and then came back up to equilibrium, consolidated at equilibrium. Wednesday's equilibrium, took off again, and took out Wednesday's buy side liquidity just before the New York Open. Maybe I'll see what time we actually did it because it's the 9 o'clock candle. So I can't say just before until I go to the 15 minutes. Consolidated right around Wednesday's high for the rest of the day. All right, let's go into the lower time frame and see what this chop slop was. 15 minutes. Wednesday, Thursday was unemployment numbers, and then it was the day before PPI. All right, let's go look at it now. Look at the chop slop. Look at the chop slop. Okay, 0 UTC over here. We traded down. Almost came into new, hit the rejection block. Right. Again, right here. I was talking about, you can. This the first touch of the rejection block. You got the long wick. Then that's the first touch of the rejection block. Then it takes off right there. Right. And then this is the revisit of the rejection block over here. It came back down into the rejection block. Boom, revisit. All right. So 0 UTC came down, almost took our sell side, did not take it. Came back up to equilibrium. Had a little fake out here where we hit this this fair value gap. A little fake out to the downside. But anybody who studied ICT concepts, 9 times out of 10, you probably wouldn't have got faked out of this as far as taking a short, because we came here, we had a breaking market structure here, right? Got a fair value gap, blew through this order block right here, just totally disrespected it, right? This was your telltale sign right there that if you get any kind of retracement around this area, you ain't going far down, because we blew through that order block right there with no kind of second thought, got up into this fair value gap, volume imbalance and liquidity void, sold back a little bit and just started consolidating, then pulled back down to where this fair value gap here, right there in line with the order block. You know what I'm saying? Right there in line with the order block. Let's check this price leg right there and see how far down that is. So looking from the bottom to the top to lower that. It's still up in the premium on that right there, but that's the order block that it's set. That's the order block that it's set there. There, it's still in the premium on this piece of the price leg. All right, but that consolidation right there. Oh, we had to stop. Yeah, that's still in the premium in that price leg right there. So I would have been, I ain't gonna hold you, I would have been leery about um trying to buy off of this as far as that right there, that price leg there. But looking at the overall picture, we're still in the discount. So if I would have got duped into trying to see it on this lower time frame, I would have been leery about buying anything off of this, even though this ain't like no time that I would be trading. But you know what I'm saying, looking at the overall time frame. That's why I'll be saying you got to be careful about getting sucked into. You see how I just got sucked into looking at all this lower time frame stuff when I done went through and marked everything on the higher time frame that I need to be watching, and I still got sucked in. Y'all hold up, that's my little brother. My little brother calling me. What's happening?
Hey, you think Susan Long gonna be able to pick the thing up something?
What time?
That's why I'm calling you now.
I mean, I don't know what time she be going to lunch and stuff. If she can't do it, I can just run up there and pick it up.
It's giving me 2:30 to 5 every 30 minutes.
2:30 to 5.
Yeah, every 30 minutes I can pick a time.
All right. Yeah, I don't know what time she go to lunch, so I just shoot up there and get it. You can put it down for what time it is now? 1 o'clock.
Yeah, it's like 20 minutes to 1. What you want me to do? 4 o'clock, 3:30?
Put it for 3:30.
3:30 pick up. What's that game? We got birthday. We got that. Let me see.
Yeah, I'm back, everybody. I'm back. But yeah, don't get caught up in staring at them lower time frames. I'm sitting up here just staring at it. Start trying to look at stuff. Stick to your higher time frame stuff that you already mapped out. You see, I was like getting sucked into looking at this. Oh, let me look at this. Let me look at this. Let me look at that. I was just getting sucked in. So we consolidated around equilibrium, starting just before London. We got above equilibrium, then we stopped, overshot this fair value gap a little bit. No. Yep. Then we pulled back to equilibrium, consolidated at equilibrium all through London. That's it. All we did was consolidate at equilibrium all through London. Then at 6:15, started pushing up, took out buy side liquidity at the 8:30 candle. So when the job numbers came out, that was Thursday, yes. So when the job numbers came out, we shot up and took out the buy side right at 8:30. So 8:30 we took out the buy side, and then quickly pulled back down to equilibrium. Soon as the New York opened. So we pulled down, and at the New York open, we sold off right back down to equilibrium, touched equilibrium, and took off again and took out buy side once again, came all the way up to the top, almost filling in this 4-hour fair value gap. Then we pulled back down. Sloppy price action, overshot the fair value gap after the break in market structure on the 11:15 candle, right? And then a quick fake out, like we hit the overshot the fair value gap, pushed back up to this fair value gap, pulled back down again, then pushed up, didn't take out the buy side, then pulled back down again. So this was real chop slop. This was some real chop slop. This I can't remember if this that day when I was trying to take that futures trade and I didn't like the way it was trading. So I covered and I got stopped out with one. I think this was that day. Right. I can't remember, but this was real chop slop. I was like, I don't like the way this is trading. And then I moved my stop to save 1 point and it came back and stopped me out and at 1 point. But yeah, this was a bunch of chop slop. It was real sloppy and choppy. So yeah, we ain't gonna waste no more energy on that. And then let's get over to Friday. Okay, let's get over to Friday, and then that's gonna be it. So Monday and Tuesday, Monday and Tuesday had decent price action. Wednesday had something decent in the London, and then Thursday it's a big range day. It's a big green candle, but it was just chop slop, chop slop. It's easy to go back. It's easy to play Monday morning quarterback and be like, hey, look at this. But when you sit down and really look at the price action like we're doing right now, you know what I'm saying? You know, looking at this Wednesday calendar, you wouldn't know that there was a real decent trade in there for futures during London. Just looking at that, and then you look at this and be like, oh man, I missed a lot, but that was chop slop. It was a chop slop day. You know what I'm saying? And go back and really look at that. I'm gonna go ahead and take off this 4 hour fair value gap there because we went to the top of that on Thursday on this daily fair value gap that we got right here. We got above the mean threshold of that fair value gap. I'll leave it there because we ain't feel it all the way in. Then we got this 4 hour right there, that breaking market structure that we had on. I think it was a 4 hour time frame. And then let's go to 4 hours, see if I want to change anything. Um, Thursday. Oh, I was supposed to move this over. So Thursday 14. All right, so Thursday 18. So yeah, boom. All right. That's it. Set this high to low. Equilibrium on Thursday. Drop down to the hourly. Thursday must have made the low early in the day, like Wednesday night, and it did. Yeah, it made it Wednesday night. I'm like, man, why that Thursday coming? But it made it Wednesday night. Okay. All right. So all right. So Thursday, 1600, so 0 GMT, UTC. We took off and went straight for the buy side. Took out the buy side. So from the open of the Sydney all the way up until um, 1 o'clock, we just went straight for the buy side. 2 o'clock candle, from 2 o'clock, from 2 to 3 o'clock, we made the overnight high. We traced back down. Um, and bounced up, took out the overnight high at the 7 o'clock candle. Then at the 8 o'clock candle, made the high of the day, then melted off heavy. That was CPI. Yeah, no, CPI came in. Yeah, 8:30. PPI came in at 8:30, so melted off heavy. The news candle. So the news candle took us all the way down to filled in. We got a hourly fair value got there. We got this order block. We got an order block there. Stretch it out. Keep in mind we got the entire order block here. So it came down just below the mean threshold of the entire order block. That's the bottom portion of the order block. Came down just below mean threshold of the entire order block on the news candle. That's on the hourly time frame. On the 4-hour time frame, came down to again that 4-hour order block in the mean threshold of the hourly order block with the confluence, the time frame confluence, or nested time frame, because this is a nested time frame inside of a higher. This is a nested order block inside of a higher order block. So it's got the confluence or nested, however you want to look at it. ICT call it nested sometimes. I say confluence on time frame confluence. All right. Then came back up, popped back up. Then on the 9 o'clock candle, we pushed down to just below Thursday's equilibrium again. We went down just below Thursday's equilibrium one more time. Pushed up, came up, and filled in this fair value gap that we made on the hourly. Pushed up and filled that in. And sold off the rest of the day. We got up on that news candle. Right before the news candle, we got all the way back up to that breaking market structure in that 4-hour fair value gap from way back over here. The breaking market structure was on Monday at 2. No, we broke Monday's swing low, 2 o'clock low on Tuesday. The is this what you was talking about, Margot? When you said you had an aha moment, we had the swing low on Tuesday, and it was broken on Monday, and it was broken on Tuesday. Is that what you was talking about, your aha moment? When you was like, I just had an aha moment. So we had the swing low on Monday, breaking market structure on Tuesday on that 9 o'clock candle. Because I remember you said something about a 9 o'clock candle, right? So I had a breaking market structure there. And then we came all the way back to that breaking market structure on Friday, right before the news. Right before, look how dirty, when you sit back and like really look at this, right? You really look at this. Look how dirty they did this. They took a whole week to come back and use the news to sell off of this breaking market structure way back here at the beginning of the week, right? We set a low on Monday, right? Dilly Dally had a breaking market structure with a fair value gap. Look at this. Look at this. This ain't nothing but a breaking market structure, fair value gap, retracement. It took a whole week to do it. An entire week, and the algos sold it off handsomely. It was an entire week, but how much of a trade was that? How much of a trade was that? 60 points. 60 points for not an entire week. If you sat there and waited an entire week, right, you was rewarded 60 points. They some dirty dogs making you wait that long, right? So we sold down, right? Made a low. Get out of here, spammers. We sold down, made a low on Monday, consolidated, had a breaking market structure on Tuesday with a fair value gap, and it this, and then there's another one that's nested also, because we on the hourly time frame, right? And this is an hourly fair value gap right here, but this is also a 4 hour fair value gap. So you got confluence, you got time frame confluence here, right? So let's look at the 4 hour real quick. So on the 4 hour, right, all of this is confluence. So you got a, a 4 hour low, right? You got an hourly low, that's confluence there, right? Or nested, as ICT be calling them, because you got the lower time frame inside the higher time frame. So you got the 4 hour swing low, you got the 4 hour breaking market structure, you got the 4 hour fair value gap right here, right? So that's the breaking market structure right there. So then we drop down to the hourly time frame and look at that exact same area. Since we got everything marked out, there's the low, right? Now you got an hourly swing low that's in the same place as a 4 hour swing low. You got an hourly breaking market structure, which is in the same place as the 4 hour breaking market structure. Then you got an hourly fair value gap right here that's inside this 4 hour fair value gap. So you got all that confluence right there. And when you zoom it out and sit back and look at it, you go over the whole week, come down, then you trade all the way back up to the breaking market structure and sell off, right? So that ain't nothing but a breaking market structure, fair value gap retracement. That's all that is. And it was a 60-point move. You had to wait a whole week, but you got a 60-point move out of it. These some dirty, dirty dogs. Okay, let me look at the chat real quick before I move on. Before they took by side. Thanks, Tim. All right, cool it, go to sleep. That was Valdez. Oh, that was Valdez. Oh, Valdez said that. Okay. My aha moment is singing Beyonce to the left when marking my charts. That was Valdez with the low. It looks only. I look at only liquidities. Okay then. All right. Okay then. Valdez, I'm sorry, Valdez. That was you. If that was what you was talking about. And then Friday. Let's go to 15 minutes and let's look at Friday. Since I just had an aha moment with the thing too. So Friday 0. All right, LUT. So we came up. Yeah, we was talking about Friday already because we came straight to the buy side, and then we pulled back below it a little bit, went up, hit that breaking market structure that we was talking about that we made back on Tuesday. Came into the 4 hour fair value gap, the hourly fair value gap, everything that we looked at back on Tuesday. The news came out, and then we sold off all the way down to, that was a 60-point sell-off, all the way down to we came down. We got like some hourly stuff we went into. We got a liquidity void. We got into its fair value gap that we closed, touched below this consolidation. It was I think it was like a 4-hour order block. Something we looked at. What else? We looked at a bunch of stuff that it came down to, and then we pushed back up. We had to break in market structure to the downside, and we chopped our way back up to get back up to um, this breaker right here. We chopped our way all the way back up to this 15-minute breaker right here before selling off again. This is the huge fair value gap that I was talking about, where I was like, it would have to come like way up here for me to take a trade off this fair value gap this big, because it was outside my risk tolerance. But we eventually got back up into this breaker here, all right, and then because we went up and broke the highs and then sold off. When you break the highs and sell back through it, when you come back, that makes it a breaker. Eventually came back to the breaker on the 11:45 candle. Actually, we hit it on the 11 o'clock candle. Hit the breaker, right? Came back to the breaker again on the 11:45 candle. Then throughout lunch, we sold out throughout lunch. Then at 1 o'clock, set a new low, pushed back up into this fair value gap right there. All right, so we came down, set a new low, pushed up, had to break in market structure first, pushed back up into the fair value gap, consolidated, set a new low during the consolidation, right? And for no known reason, just sold off at the end of the day. We talked about that on Friday, where it was like this was the setup, and it was a long hold, because like, okay, you took the short there, but it consolidated forever and chopped around forever, then sold off. It would have paid off for a futures trade, but for like, just say if you took this on a 0-day options, you would have got clapped. If you took it for like a swing for next week, then that would have started printing something for you toward the end of the day. And that's gonna be it. That's gonna be it for the week review. Again, I must say Monday and Tuesday were the cleanest trading days. Monday and Tuesday were the cleanest trading days. Wednesday, it had a nice trade during London. Thursday was chop slop. Friday was chop slop, unless you were looking at the entire week and was trying to take that breaking market structure fair value gap retracement for the entire week. I've never looked at a play that long. I ain't gonna hold you. I have never sat back and looked at the entire week and was like, okay, it's coming back to this breaking market structure fair value gap retrace over an entire week. I've never looked at that. But I promise you, I'm gonna be looking at it from now on. I'll be looking at it from now on, because that was a nice little 60-point sell-off right there. Nice little 60-point sell-off with the news candle. And then after the news candle, it gave you an opportunity to get back in and come back. You wouldn't have got 60, but it still was a nice move to the downside after the news candle. Oh, excuse me. But yeah, man, I appreciate y'all for hanging out with me outside in the backyard today. We're gonna be back in the study tomorrow. I'm open up the comments. We're gonna be back in the study tomorrow for the weekly chart prep. I don't see no other comments in the chat. I appreciate y'all for hanging out with me, man. You could have been anywhere else in the world, but you chose to pull up and just watch me do what I usually do on Saturday mornings. I usually go faster than that, but it's like when you trying to talk out loud and make sure it be clear, it tends to take a little bit more time, which I don't mind, because hopefully I was able to say something or do something to help somebody, you know what I'm saying, look at price a little different, or maybe even give somebody an idea of something that they can do on their own. They can add this type of stuff, this type of, you know what I'm saying, week review to their own arsenal, and go back and look through it. Add some stuff to they back utility belt. They back utility belt. Um, like you going to study ICT now. Don't put your brain on overload, Marco. Don't put it on overload. All right, man. I appreciate y'all for hanging out with me. I'm about to go probably fall asleep on Travelers. Go try to catch me a couple episodes of Travelers without falling asleep. The homie Zay gonna pull up. He gonna do a live at 2. I think he said he gonna Sativa Saturday. If I don't fall asleep, I'm gonna pull up on Zay and see what he talking about. But I'm gonna go probably fix me a sandwich and watch Travelers and try not to fall asleep. I'll see y'all tomorrow at 3 o'clock for the weekend chart prep. Gone.